Hey everybody, good evening. Happy Thursday, and hopefully everybody has a fun weekend planned for Memorial Day. We are doing a live stream tonight going over some charts that I touched on last week in the weekend video, and we're going to kind of go over what worked, what didn't, just how did things evolve from when we looked at it last Friday. So we'll go over the broad markets, we'll go over some individual names, and then I have 5 other names that I did want to go over on top of the tickers that I touched on last week. So let's dive right into it. But before I do, just wanted to let everyone know that we do have the 50% off sale going on for life. So you get 50% off locked in for the Memorial Day sale for life. As long as you're a user, you get that 50% off as you essentially renew each year, each month, whatever the case is. So let's dive right into it and look at starting with SPY, just going over, as I mentioned, kind of a top-down approach, looking at the broad markets, and then we'll go into some individual names. Starting with SPY, this has been kind of crazy. If you guys are following me on Twitter, I've probably been posting this chart now for the last 2.5 weeks. And there's really no reason to change it. And, some people like new charts, new content, but if a chart is still relevant, there's really no reason to change it. So with SPY here, we've got this previous support zone, and then we have this flipping over to resistance over the last 2.5 weeks or so. And you'll see here that we really have bounced off the COVID low VWAP perfectly now twice, one on May 12th, and then we undercut it a little bit on May 20th and closed above it. I had a question last week, what does undercut mean? An undercut is essentially when you break down below a level, but you end up regaining that level and holding it. So it's pretty common, especially things that people are watching, SMA 200s, 50-day SMA, these things a lot of people are watching. So they're not going to act as perfect support or perfect resistance. You're always going to have some volatility around these areas. And that's what we saw on the COVID low VWAP. So we kind of have almost this W bottom trying to form here. As you can see today, we did hit that 406 to 408 area above, which was really just a function of this previous support zone turn resistance. We saw it on May 17th, and then we're seeing almost a perfect rejection intraday today on the 26th. Now, not saying we're gonna reverse from here and continue down, but we are at an area where we have had trouble getting above this zone. So if we can really get above this area, I think things are going to maybe be looking up for at least a little bit. Now, one thing that I wanted to go over is a completely different view. This is actually the daily view as well, but it's just looking at things a little differently. This is a falling wedge breakout that we had today. We've kind of been testing this falling wedge resistance zone for the last couple weeks, and we finally broke above it. So this is going to give you a completely different view on what we're looking at. And this time we'll use the VWAP above as the level of interest. So, that VWAP is almost right in line with that previous support now acting as resistance zone. So not only do we have that support, that trend zone above that is acting as resistance that we just went over in the last chart, but this VWAP above from the start of this falling wedge resistance from April 21st is also a level above that's actually acted as resistance a couple times back in late April. We did move through it and then cut right back down in early May, and now we're starting to move up towards it again. This level is right around 409 to 410, 409 to 410, and that's the thing. You rarely will see me mention an exact price level. Generally, I'm giving at least a couple % margin of error around these levels, because that's just how the market trades, especially in more volatile markets like we've seen. So it is interesting to see that we are getting up near this 409 area. You could also create a VWAP from this swing high from March 29th, and you'll see that VWAP has also been relevant multiple times back here on April 21st. And then we kind of rode along it in early April and then just, could not get above it. So if we do break above this VWAP from April 21st, then our next level above to watch would be around 420. That would definitely be a level where things we would need to reevaluate. And I think it's interesting because 420 was definitely an area on the downside people were watching, and now it's going to be a level to the upside. So pretty classic SR flip. 420 was previous support. Now it's going to act as potential resistance if we do continue up. So all in all, the main things, at least on the daily chart, that you want to take away here on SPY is simply the fact that we are holding this COVID low VWAP. So what I mean by that is essentially just we're looking at the VWAP from the COVID bottom. So when I say COVID low VWAP, it just means that we're measuring the volume weighted average price from that capitulation point on March 23rd, 2020. So all in all, that is your daily view. Let's move to the weekly view. And you'll see this, it's very similar, right? We're just, we have bigger candles here, weekly instead of daily. And you'll see that finally we're getting a green week after 7 red weeks in a row. And so if you did watch the weekend video last week, we did talk about, this many red candles in a row being pretty rare. So if you haven't used it, use the pattern feature. So the pattern feature, one, if you're trying to learn technical analysis, you want to train your eye on what does a hammer look like? What does a bearish engulfing candle look like? The patterns feature will help you. You can see there's literally, there may be hundreds at this point, at least 150 different patterns that you can highlight on the chart. Now for me, on this case, I want to highlight 6 red candles in a row. And so you can see here that I don't have 7 red candles in a row, so that's why it's highlighting 6 red candles in a row kind of twice, because it's counting it each time 6 red candles happen. So essentially, if you start looking back, and we touched on this in the last week's video, we have not had this since June of 2008. So June to July of 2008, we had 6 red candles. And this is something that I had mentioned last week. History doesn't repeat itself, but it usually rhymes. Here's what the chart looked like after those 6 red candles in a row. So what you had was you had 6 red candles. You did have a capitulation candle here in mid-July of 2008. It didn't close red, so we didn't have 7 red candles in a row, but we did hit a new low on that 7th week, just like we hit last week. So you can see here that we did have a decent little bounce over the next month and a half or so, and then continued down. And then if you keep going back, you'll see here that we did have a similar setup here back during the dot-com bubble crash. And you can see that, these generally had some type of bounce after them. So this is pretty technical to just get a bounce here. You don't have to have anything that's really changed, but 7 weeks in a row being red is very uncommon. And in the past, we have seen that this generally does have at least a short-term bounce. And you can't say, oh yeah, well, this is a short-term bounce or this is the bottom. Nobody knows. And if somebody's telling you that, then they're just completely guessing and, trying to be the next Nostradamus. Nobody knows what's going to happen. We have to take price action for what it is and watch it evolve. And then we can continue to make assumptions and get an idea of maybe what's going to happen next. That's what technical analysis is. It's not there to, try to predict the future. It's there to give us levels, give us areas to watch and see how price action does after that. So that's the weekly chart. The monthly chart, we might as well look at it. We only have a couple more days left of trading for the month of May. And this kind of broadening channel here starts back in mid 2010. And you'll see here that we're kind of getting near the bottom of this broadening formation. So will we continue down? That anchored VWAP from the March 2020 low is definitely holding for now. And we'll just have to see if that continues to hold. But all in all, this is a crazy market. You've got a lot of macro factors affecting what's going on in the market. And so technicals are not going to be the only thing you need to use. You need to start looking at, interest rates. Is the 10-year continuing to rise? Those types of things are going to help get a better full picture of what's going on in the markets. But for now, that 380, 3,800 on the S&P 500 index is what you want to definitely keep an eye on. Going into the Qs, I guess we'll just start here on the monthly chart and go into the lower time frame, even though generally you want to do the opposite. But for this chart, you can see that we are nearing this longer term level of support, and it has been previous support. We can't say that it's going to act as support this time around, but you'll see here that this has been a pretty strong area. So let me just highlight a few of these times that it has touched. So there's 1, 2, 3, 4. So this would be the 5th or so time that we test this zone below if we do continue down. But for now, the 2018 low VWAP is holding. So you'll see that better actually here on the weekly chart. And this is something that Brian Shannon brought up in his analysis last week. So shout out to him for seeing this. And, you know, naturally as a mentee of him and using the anchored VWAP, this is a level that I'm also going to be watching. So the 2018 low is here, December of 2018. And you can see here that so far we literally almost touched that to the cent. And that rarely happens, but in this case, we literally almost tested it to the cent. All in all, decent candle. It is an inside bar from last week. You had a huge range last week. We're kind of still trading within that range. So it'll be interesting to see how we end the week going into the long weekend. But for now, this level is holding right around 280. If we go into the daily chart, you'll see here that we did not actually fill this November 2020 gap. So this 2020 gap is from pretty much when we got the election results. We got that gap up. And so we are starting to kind of approach that again. We almost filled it on last Friday. We filled it like within like 40 cents, but we did not actually fill it all the way. So downside, you definitely want to keep in mind that there is that gap below that fills right around 277, 276.50 to 277. And then same thing that we touched on with SPY. You've got this previous support zone highlighted in green, now flipped to resistance. I have had a couple questions, how do I actually, how do I change the color here? That's manual. I did that manually. So it is not something that's automated where it just automatically flips to red once we're below the zone. I do that manually and have to change the colors and all that. But all in all, same thing. Previous support now acting as resistance once again. We tagged this trend line above pretty much right on the money, and then pulled back a little bit into the end of the day into close. But still, we need to get above right around 306 to 308 to really get things, moving. But I am starting to become a little more confident that we are maybe close to a short-term bottom with a pretty big move coming. And my logic behind that is, look at NVIDIA. NVIDIA had earnings. They were down 10% after hours, and then they ended up closing green today. So the market, I think, has priced in so much bad news at this point, so many negative things that can happen. Once that's priced in, the market, it's hard for the market to go lower unless something comes out of left field and creates a new status quo. But for now, a lot of negative things are priced in. And with NVIDIA's earnings, seeing it get down 10%, and even Snowflake, and we'll go over that one as well. We'll go over both of those charts. But the fact that we reversed from those after-hour sell-offs yesterday from earnings is kind of telling me that we may be getting close to short or medium-term bottom here. But we really need to break above this previous support acting as resistance zone. If we turn on the other view on the daily, which is this falling wedge, we have not broken out of the falling wedge yet here for the Qs. We're kind of nearing this resistance zone above. Same thing. We want to start a VWAP from the start of this falling wedge. That VWAP is right around 318. So our first level that we want to get above is around 306 to 308, which is simply just that previous support resistance zone. So this is where you'd get your 306 to 308. And if this thing takes a while, maybe it does something like this, maybe go up, down, up, down, up, down, and then go up and try to break, then we would only need to break above 302. Remember, these diagonal lines are a function of time. So as time goes by and it's sloping down, then those price levels change. If we went straight up today, we would have needed to get close above 306. If it takes another couple weeks, then, it could be 302, 303. But for now, 306 to 308 is the level I'm watching. And then if we break that, then that VWAP above is right around 317, 318. So those are your levels that you want to watch above. Below 276.50 to 277, which is that gap below. Moving on to IWM. Same thing. These charts look very similar. Generally the broad markets move pretty similar, but it's kind of crazy how similar all of these charts look. This looks a lot more like the Qs rather than SPY, at least with the gap below. We did not start filling that gap below from November of 2020, but you can see here once again, we are retesting this previous support zone, now acting as potential resistance. And for me, we need to get above 185 to 184 to 185 before we can really start looking at further continuation up. But if you do look at that other view on the daily, we do already have the falling wedge breakout here. So that is something you definitely want to keep in mind, that IWM is kind of leading the market right now. And definitely something to consider. The VWAP here is pretty much right where we closed. So this is definitely an important area to get above. So not only is that VWAP in line with the previous support now acting as resistance zone, but that falling wedge VWAP from the start of this resistance zone is also acting as almost perfect resistance. So all in all, this is maybe where you want to go in and look at some other things on top of the technicals, maybe some options flow. Let's just get an idea of kind of what we're seeing here on the unusual option side of things. Interestingly enough, you saw a lot of puts coming in. Now, the thing that I think a lot of people sometimes have trouble with is just because, there's an unusual option on the put side, that does not necessarily mean that somebody's buying a ton of puts. They could simply be covering their position. They bought puts, now they're closing their puts. Maybe they bought them way up here in the 200s, and they're starting to close them now that the market's reversing. So sometimes it is hard to kind of see what exactly is going on there, but you can see here, let's just filter this out with premium, bigger premium. And let's just do 1 million and over. And you can see most of these are relatively decent sized puts. You've got 5.4 million in premium for the September 2022 175s. You've got a few down here that are in the $3 to $3.5 million range. So all in all, this could simply just be people, closing their positions because they made money on the downside. Now they're closing them for upside. So that's something to keep in mind with the unusual options. It's definitely something you can check out on the platform. It's simply just on the sidebar. It's a widget. So you just go sidebar, add or remove widgets, add new widget here, and you'll see all the different ones we have. We have seasonality, we have insider trading, unusual options, all of that. So that's where you can get this unusual options information. Let's move on to Bitcoin, arguably probably the best risk on, risk off indicator for me, at least in the market. And it's kind of interesting. We haven't seen Bitcoin moving with the rest of the market, right? We actually saw Bitcoin almost break down through this pennant today. It's into the daily candle into today. It's kind of hard with crypto because it starts at a completely different time. We say today, but technically, over where the day starts for crypto is already tomorrow. So all in all, we do have a new daily candle. Yesterday's daily candle did kind of break down through this pennant, but now we're just trading flat. I mean, we're literally not moving at all, which is kind of weird because generally when the market is starting to get a little bit of a bounce, you will see Bitcoin be a little bit of a higher beta mover. So if the market goes up 1-2%, generally Bitcoin's going up 4 to 5%. We just haven't seen that yet. We've actually seen a little more bearishness than anything. So could this be a little bit of a suggestion that maybe the market isn't as strong as we think it is? Definitely possible, but I mean, at this point, we literally are just trading pretty much in a flat line over the last week and a half. So that's the daily. Let's look at the weekly here. One thing that I did want to touch on before we go too far into Bitcoin, I did want to touch on the longer term timeframes on IWM as well. There's not much difference here. The only thing I'd mention here is that we are kind of at this this 2020 high zone, and we bounced off of it. And that's kind of right in line with that gap. So for now, we are bouncing. We did have 5 red weeks in a row for IWM. Should be a green week. You never know what can happen tomorrow, but that's a pretty strong candle going into Friday. Now, on the monthly side of things, same thing. You can actually extend this a little further. So the 2018 high and the 2020 highs are right in line with that 165 to 175 area. And that is where we've bounced so far. So that's kind of a full analysis on IWM, looking at the longer time frames. This is a very crucial level to hold here on the horizontal level side of things. And then Bitcoin, looking at the weekly and the monthly, really the main thing to keep an eye on here is pretty much your 2018 low VWAP. So that is here. And then your COVID low VWAP. So before we were watching the COVID low VWAP right around 32.5. We broke down right through that and bounced right at the 2018 low VWAP, which is interesting considering the Qs bounced right at that area as well. So all in all, your main levels you want to watch are 25,000 to 25,500, which is the COVID, or excuse me, the 2018 low VWAP, which is from December of 2018. And then if we do move to the upside, your VWAP from the COVID low is right around 32,500 to 33,000, give or take. With crypto, you always want to add even more of a margin of error on the percentage side. So, sometimes Bitcoin has a 10 to 15% margin of error just because it can be so volatile. So all in all, I would say, 32,500 to 33,000, maybe even a little more would be your upside target if we do, get some moves to the upside here. Weekly looks pretty identical, so there's not much to mention here other than the fact that we have had, this will be the 10th or 9th, 1, 2, 3, 4, 5, 6, 7, 8, 9. This will be the 9th red week in a row for Bitcoin. And I don't think we've had many of those in the historical price action of Bitcoin. So this is definitely something to keep in mind, even on these moves down, right? We did get peppered with green candles, red candles, and here it's just been literally 9 red weeks in a row. So definitely something to keep in mind, that we are, at least for now, getting a higher low from the early May capitulation here around 25,500. So this will definitely be interesting to see how this one plays out into Sunday, which is when the crypto week is done. Let's look at some individual names. Let's start with Tesla here, and we'll start from the daily chart and just get an idea of what's going on here. So we have had some decent price action over the last couple of days. The thing that I will mention here is, you are in the middle of this broadening formation. You're not really near any levels. You could go and draw kind of a linear regression channel here that we're like roughly kind of trading within. So that's something to keep in mind. But all in all, it's definitely kind of in no man's land in the middle of this broadening wedge. So, there's a lot of room to the upside to move up. There's a decent amount of room to the downside. Your COVID low VWAP is right around this 510 to 520 area, which is right in line with this support zone below. So you do have some confluence below for the trend zone as well as the VWAP from the COVID low. But then on the upside, if you wanted to just get a general idea of maybe how high can this go before potentially hitting some type of resistance, your VWAP from the April 5th high is right around 865. Let's just call it 860 to 865. So upside, I would say around 860 to 865 here. Downside, 510 to 520. And that's kind of what you have to do with these levels. You just have to know, hey, this is my upside, this is my downside. So you're not just looking at, okay, well, this is the upside. Well, what if it doesn't go up? What if it does reverse? You need to know, what's your downside level, what's your stop, these types of things. This one's pretty easy. Your stop would simply just be, right around 620. With Tesla, I'd give this probably at least like 2 or 3% margin of error below, because this does have a tendency to kind of stop people out because so many people trade this. But upside 860, 865, downside 500 to 520. So that's the daily. The weekly is actually looking pretty decent here. We have this falling wedge that's forming on the weekly chart, and we are getting pretty close to the apex here. So let me kind of zoom in here. Pretty strong weekly candle as well. So as I mentioned, we are getting to the apex. The apex is simply just kind of the end of this this falling wedge setup. And you can see here that we have had quite a few tests of this previous support zone. So this is a pretty strong support zone. You can see that we have intra-week broken down through it, but we have never actually closed below this area. So this is a really strong level to hold, and definitely interesting going into the week ahead to see if we can get continuation to get a breakout of this falling wedge on the weekly. On the monthly, this is actually pretty interesting. We do have kind of this ascending triangle breakdown. So this is definitely showing a little more of maybe the bear side here. So you can see here that we have broken down through it. Technically, we have a few more days left in the month. So if you want to, wait till the end of the month to get a final reading here, but it is worth noting that we are definitely breaking down here, at least on the monthly chart. And your 2019 low is kind of at least where I started the VWAP. And you can see here that's way down here around 375. But then you also have this handoff. And remember, the handoff is simply just the last candle to test the original VWAP. So you'll see here that this candle that I've highlighted, this is the last candle that tested this original VWAP. So, if we want to make this orange, just so we can kind of distinguish it a little bit, you'll see there's no other candles that have tested this VWAP, this orange VWAP. So this is where you want to start another VWAP. This is your handoff point, taught by Brian Shannon. He is kind of the godfather of VWAPs and anchoring them. And this is just simply something I learned from him. But all in all, that handoff VWAP is right below around 535 if we did continue down into the next few weeks or even months. So that is Tesla. Let's move on to Apple. And you will see here that Apple's monthly chart, I was actually going to draw this up live. So let's start on the daily chart. And you'll see here that we have this, this VWAP that starts back in September of 2020. That was kind of our bottom before we continued higher. And this 6% offset's held pretty well. And I mentioned this in the weekend video last weekend, but essentially the 6% offset was picked simply because we bounced at that approximate offset previously. So, that's kind of where I came up with the 6%. It wasn't just like, oh, let's pick 6%. It was a function of the previous lows in November of 2020 and then again in March of 2021. And then we did bounce right off that offset once again last week. And then you've got this just crazy candle today that's pretty much engulfing the entire range of the last 3 days. So it pretty much took out the downside from the last 3 days and the upside today. So a really, really strong candle here on the daily chart for Apple. And this type of setup, just with how Apple leads the market a lot of the time, it's just hard for me to think that we're not going to get at least a pretty decent bounce. If I were to take a wild guess where we're going to bounce to, I just draw this horizontal level above, right around 148, all the way up to around 150. So that's where previous support would act as potential resistance above for this one. Now on the weekly chart, you can just see this zone a little better. You can see that in this case, we had 1, 2, 3, 4, 5, 6, 7, 8 red weeks in a row for Apple. And once again, that is very, very, very rare. So it would be shocking that we don't have some type of at least short covering event where people who started shorting this way up in the 160s and 170s are taking profit, and that creates artificial demand for the stock because they have to cover their shorts by buying the stock back. So I would say 150 would be my level above if we do get a continuation up. And then that previous low would be your downside level to watch around 132, 133. Now let's go on the monthly, and we'll just kind of look at what's going on in the monthly and kind of do a live charting here without any annotation. So for me, looking back at this, this is this is still pretty overextended. Now, just using basic support zones, I would start my support zone here from 2003, the bottom, and connect this area here. So what I'm doing is I'm connecting this wick to this wick, and I'm simply just extending that zone more than just wick to wick, because at this point, this trend line is only 2 points, right? Like we're only connecting this wick to the other wick that I just mentioned. That's only 2 points on the line. You generally want to have at least 3 to 4 points on a trend line for it to be relevant. That's why you add a zone, because now instead of having 2 points, look at how much price action is now within this area. We've got this whole area here, which is the initial wick, but then we've got this pretty much from January 2019 all the way to around March 2020. We rode along this trend zone and then finally, moved up through it. So downside here, at least on the longer term side of things with the monthly, you have a zone all the way down to around 106 to all the way up to around 125. So that zone is pretty big. When you have volatility like this, you're going to have some pretty big ranges to watch. So for me, I'm definitely watching this this monthly support zone that goes all the way down to around, let's just call it even 100 to 105. That's where the bottom of this zone is, and then as I mentioned, the top of the zone is around 125 or so. So all in all, definitely. Definitely still in a long-term uptrend. We have pretty much hit higher lows since the early 80s on Apple. But you can see just how far we've gone with this this chart, and is this kind of the time where we do break down through this 15+ year uptrend? We'll just have to see. But that is your level to watch on the monthly side of things for Apple. Let's move on to Amazon, and we'll start on the daily here on Amazon. Nice kind of W bottom trying to form here as well. You can call it W bottom, you can call it a double bottom, whatever the case is. You've got the May 12th low, and then you've got the May 24th low, kind of creating this double bottom. And, we'll see what happens here. I mean, a decent candle. One thing that I would point out here is simply the fact that, we are kind of breaking above this descending. This is essentially kind of a descending triangle here. So we did break out above it. If you look across the board, when we go on to some of these other names, you have a lot of descending triangles breaking to the upside. Now, the thing about a descending triangle is generally it does have a little more of a bearish bias than bullish. But the thing is, if you do break out to the upside with a descending triangle, it generally is a very, very strong move. So the fact that we have these descending triangles breaking out, not only on Amazon, we've got on Disney, NVIDIA, that's telling me that we may have a pretty big move in the market. And that's just kind of adding to the logic on why I think, we may be close to a pretty big rally, at least in the short term. One thing I'd mention here is the raindrop. So we do have a nice balloon raindrop breakout here as well. So remember, a balloon raindrop is simply just when you have a lot of that volume near the top of the range, showing that buyers are willing to absorb that supply near the top of the range. Generally a pretty strong signal, especially when you're breaking out of a zone. You don't always want to look at these raindrops with volume at the top unless it's really breaking out of an important area. In this case, we're breaking out to the upside of this descending triangle. So all in all, I mean, turn on the gap snake, you'll see here that we've got a pretty big gap above, and this is where you can simply go in and if you do think there's a lot more upside and you think this gap may start to fill in the next couple weeks, just create an alert at the bottom of this gap, and then you'll be alerted when you start to fill that gap to the upside. So definitely the gap snake has been useful on the downside over the last several months, and now it may start becoming useful to the upside as we do show some strength across the board. Now let's jump into the weekly chart. The weekly chart is at a very interesting level as well. So kind of like what we saw on IWM, you've got this previous area of resistance going back from 2018 all the way to 2020. And shocking, we are pretty much right at that level now. We actually hit a new low this week, which was interesting. But this is a decent candle forming into the last trading day of the week, into the long weekend. So all in all, this is I think we're due for at least some type of short-term bounce, and I think it could be pretty strong. I mean, so many people have been shorting the markets. Some people have been buying puts. Some people have actually been shorting outright. And I mean, same thing here. 1, 2, 3, 4, 5, 6, 7, 8 red weeks in a row. If you have that many red weeks in a row, it's kind of just like coiling that spring tighter and tighter. And so if everybody starts covering their short positions at once, that's when you get these huge moves. And I really don't have a bias right now because I'm just not trading that much. I've got Kuba running around the house, my 11th month old, making things interesting every day. So I've been really just trying to focus on, just kind of watching the markets and seeing how things are doing. So I just, with a completely unbiased eye, I think it's time that the markets do correct to the upside, and we'll just have to see how that plays out into the coming weeks. Monthly chart, same thing as Apple. You can see here that we've got this long-term support zone pretty much starting at the same time that Apple did back in 2001. So this one starts a little earlier than the Apple one did in 2003. But same thing here. Now, you can see that with this zone, we've got this area in 2006 that we tested. We've got this area back in 2008 that we tested. So, if we do continue down, this zone, this uptrend zone below is, goes all the way down from around 1250 all the way to around 1600. Do I think that's probable? At least not in the short term. Maybe in the longer term, if this is a bigger kind of bear market that is forming, then this level would make sense to the downside. But as we just went over on the weekly chart, it does look like 8 red weeks in a row. This is our first green week. It does look like we're probably going to get some type of at least relief rally, maybe to suck in more longs. But the market can't go lower until it bounces because you need that liquidity to get people short again. So it would be really crazy for me to think at least and see the market just continuing to go down without any type of bounce. So that's Amazon. Your upside levels, around 2,700. So if you go on the weekly chart here, 2,700 is simply just this previous support zone that would act as resistance. Let's call it 2,650 all the way up to around 2,750. And that's simply just a function of these previous lows. So all in all, definitely something to keep in mind. Now going into, and what are we doing on time here? Okay, we got about 15, 20 more minutes. Let's go into XOM here. XOM has been a very strong stock. You can see here, if we start on the daily chart, we did have this ascending triangle breakout. And you can see here that the all-time highs would definitely be your next level to watch above. And those are right around 104 to 105. And yeah, I mean, not the prettiest candle close today, but all in all, I mean, on the weekly chart, we are still grinding above through this ascending wedge resistance zone. And, I've seen ascending wedges break to the upside. They're not always bearish, kind of the same thing with the descending triangle. So all in all, definitely this is kind of your make or break zone. If we break above this and can close above it on the weekly candle, I think we're going to at least test all-time highs, if not hit new all-time highs for XOM. Now on the monthly chart, you'll see this a little better as we zoom out. Here's your all-time high that was hit back in 2014. And we're about 10 points or so away from getting back to that area. But just an absolute huge move to the upside since we bottomed in March of 2020. And, a really, really strong move for XOM over the last year and a half. Let's go into AMD. AMD is definitely an interesting one here. So we are kind of trading within this downward sloping channel. So if you look here, this channel pretty much starts back in November of 2021 when we topped out. you can see here that we've tested this support zone multiple times, as well as the resistance zone above multiple times. And right now, we're kind of in this bear flag within this downward sloping channel. So you can see here that the top of this bear flag is right around 105, 106. So if we can break above that, I think we could definitely test this trend zone above. And this is where you'd want to use the volume by price. If we anchored the volume by price from the high here, you'll see here that we don't have a lot of liquidity above until we get right to that trend zone. So what I mean by liquidity is you just don't have a lot of shares that traded hands within this 98 all the way up to around 112 area. So this white area is essentially that area where there's not a lot of trading volume. And what's interesting is, notice here that not only is the trend zone above right around this 115 area, but you also have this break-even supply zone right around that same area. So you've got a lot of overhead supply right around 114 to 116 above, and that is right in line with that trend zone above as well. So if we do move, we could move very quickly because there's just not a lot of liquidity until we get to around 113 to 115. So definitely watch this one for a big move if the market does continue to cooperate, because there's not a lot of friction above for the price to really start taking off. Now on the weekly chart, same thing here. Let me turn off the volume by price. You'll see here that, we kind of have that bear flag highlighted here on the weekly chart as well. Just because there's a bear flag or a bear pennant, it's simply just identifying what part of the trend you're in. We're in a downtrend and we're consolidating into this kind of flag to the upside. So technically it's a bear flag because we're in a bearish trend. Now we could easily continue to, break to the upside and it becomes invalidated. And you can see here these previous lows here will also be a level that you want to get above. Those are around 102 to 103 or so. And then, if we can get above, let's say 105, I think this bear flag will probably be invalidated at that point. But for now, we are still trading within very much kind of a bear flag setup. Now, on the anchored VWAP side of things, we have the 2018 low VWAP, which is the VWAP that we talked about on the Qs. And then we have the handoff VWAP here. Same thing, right? We just talked about that the last candle to touch the original VWAP, your original VWAP is this VWAP here from 2018. So the last candle to touch this zone is this candle from October of 2019. So you'll see here that so far, this volume weighted average price has acted very well as a level of support over the last month and a half or so. So downside 85, which is that VWAP in the previous lows from the last couple of weeks. And then your upside, you really want to get above 102 to 103, which is just this horizontal level, this previous support now acting as potential resistance. If we break above that, 112 to 115 would be your level to watch above, which is simply just that trend zone above that we talked about, which is right in line with that overhead supply using the anchored volume by price. If there's any questions, we do have some of the TrendSpider team kind of, in the chat, and they can send me the questions. I don't have the chat up, but if there's any questions you guys have, feel free to shoot them over. We've got 5 more tickers left. I'm going to go through these a little quicker than I did these last 9 or so stocks, but we will dive into NVIDIA next. So definitely same sector, same industry. You can see here, NVIDIA did break out after earnings. Descending triangle breakout, very similar to what we've seen on some of the other names that we've talked about tonight. Your downside, your gaps below going all the way down to around 141. And then your upside level to watch here is your swing high VWAP from March 29th, and that is right around 202. So downside 141, but before 141, you also have a gap above that, which would fill right around 147. And then, as I mentioned, the swing high VWAP is right around 201, 202. Now, on the weekly chart, you can see here that the COVID low VWAP is actually holding pretty well here. So let me get rid of some of these VWAPs. I got too many on the chart. But here's your March 2020 low, anchor VWAP from that low, and that's pretty much where we've been trading. This is a great case study on being able to say, okay, well, the VWAP was a level of interest, but you can see here that we did undercut it multiple times over the last 3 weeks. However, it is holding. You can see here that we're kind of trading within last week's range, very similar to what we just talked about on some of the broad market charts that we were seeing. So that's the weekly chart, and that VWAP is right around 170. And then on the monthly chart, if you do a VWAP from the 2018 low, the COVID low VWAP is actually your handoff point on the monthly chart. So as we have been mentioning, the handoff is just simply the last candle to touch the original VWAP. In this case, the 2018 low VWAP is your original one, and then your handoff is just your last candle. So if we did break this VWAP, then, you know, my level, at least on the monthly chart with the 2018 low VWAP, would be around 120. I just can't see it getting that low, at least in the short term, without some type of dead cat bounce to get, you know, longs in so people can, you know, get some liquidity to short. But we'll just have to see. I mean, at this point, NVIDIA from the very highs to the lows was down 55%. It doesn't look like that much because we're on log scale, but if you turn off log scale, you'll see it's, you know, it's a pretty big move to the downside. I get a lot of questions a lot of the time about log scale. I'm generally using log scale because kind of the rule of thumb is if you're looking at a chart with a range greater than about 30%, you generally want to turn on log scale because it optimizes the chart a lot better because you're looking at price action, relatively speaking, in terms of percentages. Because, you know, down here, when NVIDIA was trading at $35, if NVIDIA went up $3 at $35, that's a 10% move. If NVIDIA goes up $3 at 178, it's not as much of a move. So the log scale kind of captures that difference in, you know, price changes relative to being a percentage change at different price levels. Now, if you're looking at a stock that's traded within a pretty relatively small range, let's say 20% over the last 5 years, log scale and linear scale are going to look pretty similar. You're not going to see much difference there. So that's kind of my rule of thumb if you are interested in kind of why I do log scale. Looks like we may have a question. Yeah, we'll look at some unusual options flow here shortly, maybe for SPY at the end. But yeah, so NVIDIA we just touched on. Disney is the next one. Same thing here for Disney. We had this descending triangle breakout today. And you can see here, almost very similar to NVIDIA, your swing high VWAP from March 29th is going to be your level above. And that's right around 117 to 118. And this, you know, this is just starting to break out here. So definitely keep an eye on Disney for potentially a decent move up in the month of June. And one thing, seasonality has definitely been a little off. And we can't say it's off. It's just simply a statistic. But, you know, April had a very high win rate. Market got crushed. So when you are in markets like this that are kind of a little different than the status quo, that's something to consider. Maybe seasonality is not going to hold as much weight as it did, let's say, last year when we were still in a nice bull market. But one thing that I'll mention here, let's do since the 2009 lows. Going into June, we have about a 46% win rate. This is just using the seasonality feature on the widget, the sidebar widget. And then July has an 85% win rate. So we're going into a relatively strong time of the year. But remember, with the market being the way it is, seasonality can sometimes be a little deceiving since we're just not in that bull market that we've been in pretty much since 2009. We bottomed in 2009. So that is Disney. Just keep in mind that going into June, 46% win rate. That means that 46% of the time, June closes higher than May's monthly close. Let's dive into snow. This has been you can't really use seasonality on snow because it's only been around for 2 years. So we'll turn that off. But this was a great case study on just, you know, one bear pennant. So we had this downtrend. We had this pennant forming, bearish pennant, because we're in the downtrend. We broke down below it and just tested this support zone below almost perfectly. After hours, we actually did hit it, yesterday. So you can see here, this is including after hours data. We got right down to around 110 or so. So we are trading right at this support zone now. So definitely something to keep in mind. Will we bounce from here? We'll just have to see kind of how things are going. But all in all, if the market does continue to be strong, I think we could definitely get a decent bounce here for Snow and many of the other names that we've gone over. Next one is Netflix. Netflix is looking incredibly strong here. Netflix has just been a complete disaster pretty much for the last like 6 months plus, but we've got this inverse head and shoulders here on the daily chart. You can see here that we broke out on the daily, this descending resistance. So we did have a nice breakout today. And we have this massive earnings gap above that goes all the way to 300. Not saying that we're going to get to 300 anytime soon, but we do have some gaps to fill above. Now, just using, the earnings VWAP here, we definitely want to get above around 204, 205. And so I anchored the VWAP from earnings because that's kind of when the status quo of this current company changed, right? We got new information, the market kind of repriced Netflix, and that's where we want to start the VWAP from. Kind of anytime you've got an important news event, earnings, some type of, bad news, good news event, doesn't necessarily have to be earnings. That's where you want to anchor VWAPs as well. And once again, taught by Brian Shannon, all of these different things. 204, 205 is your level above that you want to watch. Downside, you definitely want to hold above this 163 area, which was your low that was put in on May 12th. But all in all, looking very strong. Let's turn on the raindrop for Netflix here. And you'll see that we have a lot of volume supporting price at the top of the range here as well during this breakout today. So all in all, looking very strong going into tomorrow. Last one will be NIO. NIO is one that has really not been an incredibly good performer, but there's been a lot of stocks in the growth side of things that have not performed very well. So definitely not picking on NIO, but this is definitely one that has had a pretty big drawdown from the highs. If we want to get exact, so we topped out and bottomed out 82%. That is an insane range over the last 8 or so months. So for now, we're still in this downward sloping trend zone. Above goes up to around 18, 19 bucks. Let's just call it 19. So until we can break above this trend zone, I think we're going to have some trouble getting, getting some traction. But as soon as we can break above, let's say 19 and close above it, I think that would definitely maybe change the status quo a little bit here for NIO. Now let's look at the weekly chart. You'll see here that we do have kind of this big symmetrical triangle forming here. We're kind of trading right at it. This could be an SR flip, meaning the previous support zone is now acting as resistance. That's pretty much what's happening at this point. So if we can, as I mentioned, 19 is also kind of your level here on the weekly chart. If we can get back above this zone around 19, that's when things may start to get interesting again. But all in all, for now, we do need to break above this previous support zone acting as resistance. Last thing we'll look at is the monthly chart. You've kind of got this, I don't even know if you can call it a flag at this point, but you do have, a pretty just controlled move down, just kind of slowly moving down to new levels. But I mean, the crazy thing is from the lows that we saw in 2019, we're still up 800 or 1200%. So, you definitely want to keep an eye on the stocks that have not hit new lows, multi-year lows. This is definitely an example of one of those that actually has gone down a lot, but it's still up way big compared to where it was a couple of years ago. That is all I have for tonight, everyone. Thank you guys for watching. Remember, we do have that Memorial Day sale going on. It's 50% off for life. So let's say you get a yearly subscription, you get 50% off. Next year, you renew, you're locked into that 50% off again to the renewal price. So definitely something to take advantage of. This is something that we have not done before, at least on a large scale type of sale. So if you have been on the fence, definitely give this a shot. There's a 7-day free trial, so there's nothing you can really lose here. You just get access to the platform, try it out. If you like it, we'd love for you to be a customer. If you don't like it, we appreciate you giving it a shot. And yeah, I think that's everything I've got. Hopefully everybody has a safe and fun holiday weekend for those in the US celebrating Memorial Day weekend. And I will be I'll be updating charts over the weekend, but this was pretty much our weekend review going into the long weekend. So for those that are watching it live, thank you for joining. For those that are watching the recording, thank you guys for watching it. And hopefully this was helpful to see a different perspective in the market, as well as just get an idea of how you can use TrendSpider to get a better, better edge in looking at things on the technical side, but also on the fundamental side and seasonal side of things as well. Everybody have a great night, and we'll see you soon.